Hey guys, Stephanie here with Financial Design. And first of all, I just want to say thank you so much to Paige and Micah for putting this together. This has been just an amazing opportunity for us to connect with people and for everyone to learn a little bit about something that I'm very passionate about, which is accounting. And so I love working with small business owners. I love teaching on the topic of accounting, and I love educating people. So this was a perfect fit for us. And so when I asked Micah, hey, can you poll to see what everyone's interested in? And the fact that taxes came in as number one was no surprise. Before I can jump into taxes and give you guys a little bit of tips and what you can deduct, first we need to talk about your business structure, because your business structure is what's going to determine how you file your taxes. Most people in this group, I'm assuming, are going to be either sole proprietors or single members LLC. So that's kind of what I'm gearing my talk towards. If you're a partnership or if you're a corporation, some of this won't apply to you. So one thing I wanted to note on business structures is that if you're an LLC, please know that LLCs are not recognized by the IRS. So if you're an LLC, you're either going to be a sole proprietor or a S corporation or a partnership, depending on how many members are in your LLC. So when you elect for your employer identification number, which all that is, it's basically your business social security number. So when you filed for that, then you elect how many members are in your LLC. So if you've only elected one, you are most definitely going to be a single member LLC, unless you filed and petitioned to be an S corporation. Okay, so I just wanted to say that because not a lot of people know that LLCs are not an entity according to the IRS. It is a state entity. And so another thing I want to touch on LLCs is if you have an LLC, the reason you have it is probably for that liability protection. And so keeping your business separate from your personal is going to be vital to keep that liability protection. Because if you're commingling funds, meaning you're operating your business out of your personal checking account, then you are losing your liability protection. The legal term for it is you're piercing the corporate veil, meaning you're telling whoever's litigating you, you're telling them, hey, I don't care about my liability protection because there's no distinction between me as the person and me as the business owner. So it is so important to keep that liability protection and keeping your business separate from your personal. That's something very easy that you can do. Okay, so I've touched on commingling funds. One other thing I want to talk about is sole proprietors. If you're a sole proprietor, you do not take a formal payroll from your business. You take a owner's draw or a distribution. And so if you are currently expensing your payroll under payroll expense or salary expense, that is incorrect. You need to reclassify that transaction as a draw or a distribution. And so that's important because that will not show up on your profit and loss statement. Okay, so now let's talk about some strong accounting practices. The first one is what I just touched on, is keeping your business separate from your personal. So I recommend opening up a separate checking account. If you are not willing to take out a business checking account, that's fine. Just take out another personal checking account, but designate that specifically for business. And then if you are not using accounting software, make a list of all of your transactions and then give them an account code. So for example, if you purchase, let's say, waters for your office, you can create a code for, like, let's say it can either be office supplies or refreshment supplies, like whatever you want to call it, but distinguish that and group it into just specific categories. That way, when you create a profit and loss statement, you know exactly what all of those transactions are. And so the accounting term for that is create a chart of accounts for your business. Now, if you have accounting software, you already have a chart of accounts in your software. We really push QuickBooks. It's a great software. It's very economical and very easy to use. The mobile app is fantastic. So if you're always on the go, it's easy to download that app and you can actually classify your transactions on your phone, which, we live on our phone, so it's really nice to be able to just log in to QuickBooks and update all of your transactions that way. And so just record every single transaction. It doesn't matter if it was $1 for parking, record everything that comes out of that business bank account and reconcile it with your bank statement. And so the accounting term for that is account reconciliation. So every month, grab that bank statement, sit down in front of your books and make sure that each one of those transactions are listed in your accounting, whether it be Excel or QuickBooks or whatever other accounting software you use. That is so important because if there's something on the bank statement that is not on your books, you're essentially missing out on a deduction that way. So it's super important. And if you have credit cards for your business, you treat it as a business bank account. You do the exact same thing. You reconcile all of those accounts every month and you account for everything that goes through that credit card. So now let's jump over to home office deductions. So if you work from home, which a lot of us are doing right now, we are working from home, make sure that you are taking a home office deduction. So there are some criteria. The room has to be exclusive and used regularly to take that deduction. But it doesn't matter, how big the room is. That's an easy deduction. You can write off some of your utilities. You can write off cleaning services. If you have someone that comes in and cleans your home, you can write off cleaning services for your office. There's just so much we can do there that gives us a lot of wiggle room as accountants to be able to find ways to write off some deductions. So really use that. If you have a small closet, I don't care about the size of the office. Just make sure that you designate a part of your home to your business so you can write off some of your expenses that you would pay for normally. And so there are two types of ways you can record that to the IRS. There is the regular method, which is the more tedious method. You have to have your utility bills, you have to have basically support for every transaction or every deduction that you're trying to take. But basically the way you calculate that is you take a percentage of your square foot of your home and the percentage of your entire home, and you divide that. And that's gonna give you the percent to multiply against all of your bills. So I know that's a lot, but let's say your home is 1,000 square feet. Your office is 100. So you would divide the 100 by the 1,000 to get 10%. So your office is 10% of your home. So then you would take your utility bill, that's $100, and you would multiply that by the 10% and get $10. So you're able to write off $10 of that utility bill for your home office. Hopefully that makes sense. That was just mental math, which I typically try not to do, especially on camera. But it's a great way to write off things you're already paying for. So that's the home office deduction. That's the regular method. And some of the expenses that you can write off on your home office deduction is your mortgage interest, insurance on your home, utilities, any repairs, and depreciation on your home. The second method is the simplified method. So it's basically a simplified method. There's no record keeping. It's $5 per square foot of your home up to a maximum of 300 square feet. That is it. It's a simple equation that you do every month or every year, and you write that off on your taxes. Now, with the simplified method, it's important to note that you cannot take home depreciation, which is a big write-off. And if you sell the home, you don't have to recapture. So let me touch on recapture real quick. Recapture is if you've been depreciating your home under the original, the long method, the regular method, and you sell your home, you have to pay back some of that depreciation because you didn't technically stay in your home for the entire 30 years or however long you've depreciated that home. The simplified method, you don't have to worry about that. You just say, this is the square foot of my home. We'll take the example of the 100 square feet home, multiply that by 5, you get $500 a year off of your home office deduction, and that's it. That is the home office deduction. The next big deduction actually came into play with the tax reform, which is the auto deduction. The auto deduction is something that I love, that I recommend to all my clients to use, especially if they have a vehicle that they use for business. So this year, we are able to take bonus depreciation, which means you depreciate that asset. It's just basically money for purchasing that asset that you get to write off immediately. And then on top of that, you're getting bonus depreciation, which is, it's been working very well for a lot of our clients. And so we have been utilizing that. And again, the IRS gives you two methods. So you can either take actual expenses, which is maintenance, gas, everything that would encompass a vehicle that you would have to pay for, or you can take a standard mileage rate, which is the same. The IRS dictates whatever that rate is going to be every year, and then you just multiply that by the amount of miles that you have driven the vehicle for business use. So with both of these, you have to keep a mileage log. And so a lot of my clients know what's coming every year is, hey, have you updated your mileage log? Hey, have you sent me your mileage log? And that is important because if you were to get audited, that is something that they will look at is, hey, let me see that mileage log. If you're saying that you're using this vehicle for business, you have to be able to prove that. And then, so that leads me to my next point. Keep records for anything related to your business, because something might not come up now, but in 6 years, if you were able to get audited, being audited is not something that's scary if you have the documentation and the accounting to support what you've done. So it's important to keep all of your records, maintain all of your books every month, and in the event that you were to get audited, it's not going to be something scary because you have everything to prove that you're doing things correctly. So that is the standard mileage rate. Now, we at Financial Design love helping people. We have a ton of resources. We have a YouTube channel where I post every week on different topics related to business and accounting. And if you're interested in checking us out, all you have to do is go to financialdesign.co/socials. Now that landing page will take you directly to our Instagram, our YouTube channel, our Facebook. So in any way you want to contact us, you have the ability to do so on that page. And I also have a resource page on our website where you can download different templates and access some of our videos that way. And so we just want to educate people. We want to help people as best as we can. So if you know that your books aren't up to date and you've been doing this for a while, or you're just getting started and want to get started on the right foot, feel free to contact us. And the way that works is I just basically sit down with you, kind of like I'm doing now, and then you just tell me, hey, I'm struggling with this, or I'm not sure about this, and then we kind of just guide you through and walk you through, what you have to do to get things in order. And so that's just our way of saying, thank you to Paige and to Micah for, putting this on and wanting to really bring a community of people together to really just do something amazing. And the fact that the majority of us are moms and we are exhausted all the time and we still have to hustle and get our business up and going, that's where our heart is. That's where my heart is. I am a mom of two, and I stay home with my girls and work and trying to, run an accounting office. And so I totally get it's a struggle and things do fall through the cracks. And I know a lot of people hate accounting, or it's just too much. And so my job is to break it down and make it bite-sized pieces where we can work together and just I give you small action items every month of what we need to accomplish to make sure that you're ready. Because come tax season, all you have to do is say, here's everything to your tax preparer, or if you're doing it, then that gives you the confidence to know that what you're reporting is accurate. So I want to jump into some of these questions, which is why I made this kind of short. So the first one was, what is your opinion on what profit margin should be to have a successful business? Well, that's really going to depend on the business. A lot of our clients are construction clients, and so we don't look at the overall profit margin, the net profit margin of the business. We look at the gross profit margin per project, because we need to know, is that project profitable, or are we hemorrhaging funds through the project, because that will affect the overall net profit of the company. If you're in the business of creating something to sell, then I would say take a step back from the overall net profit and focus on the gross. How is that widget that you're creating, is that profitable, or are you hemorrhaging money through there? So that would be the first thing. And then the second thing is, if all of that is good, I would say a 20 to 25% profit margin is healthy for a business. Again, there's a lot of factors that we would need to consider and to look at. But if you're operating at a 20-25% or above, then you're doing very well. So that's just my personal opinion on profit margin percentages if we want to assign it a percent. So the next question is, what is an easy and convenient way to keep track of inventory and expenses? a good accounting software system. I would work with an accounting software system and then connect a inventory management system and connect those two together, because inventory is one of those things that you need to look at consistently, and you need to audit your books to make sure that the inventory is reflected correctly on your balance sheet. So I would say having those two software systems connected makes it so much easier for you as the business owner to quickly see how the business is doing. And so if you can do monthly inventory checks, I would do that. Updating your accounting software, making sure that you have an inventory. And if you're too small to say, hey, I can't justify the cost of a inventory management software, create an Excel spreadsheet and then have someone review everything in that Excel spreadsheet with the cost and how many you have, and then your inventory life cycle. Are you a FIFO method or a LIFO method? All of that needs to be in your spreadsheet for whoever's doing the audit can quickly go in and just update that information, and making sure that the older stuff is out the door first, or whatever is about to expire is out the door first. That's just my take on inventory. And then the next one is, what can classify as a business expense for taxes? Well, as always, that depends. It depends on the business, it depends on the industry. For example, if you're a makeup artist, you can write off, foundation, concealer, all of that, fun stuff. But if you're an accountant, you can't write off foundation and concealer and all that fun stuff. So it depends on your business. The IRS states that the expense has to be ordinary and necessary for the operations of the business. So ordinary and necessary. It is very subjective. It's very up to interpretation of what something ordinary is for a business owner versus another. And I think that is the point. That's why they've written it that way, because businesses are different. They operate differently. So if it's ordinary and it's necessary, then you can write it off. And then the next one is taxes. Where should I begin? We've hired someone, but what are things I should do throughout the year that would make doing taxes easier? Keeping your books up to date. That's it. If you're keeping your books up to date, if you're reconciling your accounts, that is going to make it so easy for your tax preparer to come in and create your taxes. And if you're doing it yourself, it's going to make it very easy to do your taxes. So maintaining your books, I would say, is the livelihood of your business. You need to know how you're doing financially. You need to know if you're operating in the black or in the red, and make adjustments as it's occurring. Not 3 months, not 6 months after the fact, because by then it might be too late. The next one is, what are the best financial accounting decisions to make without paying for an accountant? Well, let's see. That one got me thinking, because it's very, very difficult. Unless you're an accountant or you have a strong financial background, it's very difficult to make those types of decisions, because you don't know what you don't know. And sometimes just bouncing an idea off of someone just makes you feel so much better, and makes you more confident in the decision that you are making. So, there's a reason why, large companies have teams of people with different talents, and it's because not one person can do it all. So to answer your question, making the best financial decision is just doing your best at that moment, as that you have to make that decision. It's not something that I would recommend, though. I would say, even if you just pay someone for an hour of their time to guide you through that decision making, will save you a lot, in the long run. Okay, and then the last one that I have here is it okay to pay business taxes rolled into personal or on an annual basis instead of quarterly if you're not making very much income? So I'm assuming that you're referring to the self-employment tax, maybe. If you're not, please leave a comment so I can kind of change my answer here. But if you're referring to the self-employment tax, if your business is operating in net positive of over $400, the IRS mandates you to have to pay self-employment tax every quarter. The quarters are listed on the IRS website. All you simply have to do is, in their search bar, type in self-employment tax, and that gives you a long list of, you know, everything you need to know about that. I also have a YouTube video on my YouTube page that just talks about self-employment tax. So no, you cannot pay it annually. You should be paying it quarterly, unless you're estimating your business to be either breaking even or you're expecting a net loss in that year. Do we have any other questions?
There's one question right there from Maura. She says, we make bows and hair accessories from home. What can we write off? We don't make $1,000. Is it worth claiming on taxes?
Yes. Yes, it is. It's worth claiming on taxes because you may be taking a net loss on those bows, you know, in year 1 and year 2, but then year 3 or 4 or 5, you may be positive. So I would say yes, I would definitely, you know, report those, either report the income and the expenses. If you're working from home, then utilize the home office deduction. You can write off sewing machine, you can write off string, you can write off, I mean, I'm not too familiar with what it takes to make a bow, but the fabric, all of the supplies that you need, you can write off. If you're working with someone else, I would definitely say have a separate account, business checking account, and have everything that you are spending money on come out of that account, and any income that you're producing from the sales of the bows go into that account. It makes for accounting, it makes just reconciling a lot easier for you and anyone else that you're working with. Well guys, like I said, if you want to contact us, financialdesign.co, and I'm going to leave some of my business cards with Paige. And also, if you're struggling, you don't have to do it alone. We are here to help you. We love helping business owners, and so feel free to contact us. Thank you.